everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, we averted a shutdown last night with some last-minute action from Congress extending the budget, so it looks like we're going to buy another week here and keep things going as both sides seem to be just posturing. We also had an earthquake this week back over in Japan. I think it was a 7.1 earthquake, and I want to talk about that real briefly because the news came out that day that the stocks were down on news that there was another earthquake in Japan. Well, no, that was not why stocks were down at all. Stocks were down because they were overbought. We can see that in the chart. And believe me, the charts had no idea that an earthquake was happening or happened in Japan. The charts were simply overbought, and the market took action. It had nothing to do with the Japan and earthquake. But we know that the news and the media, they will do that. They will tell us that the market is up and down because of certain reasons, and, well, it's all fluff. What I like to do is I like to look at the evidence and see why the market is really up and why the market is really down. And we do that by looking at some key indicators using the US dollar, commodities, the 10-year Treasury yields, and of course the stock market. Let's begin here. And well, we'll start with the US dollar. First, point one shows that the US dollar and commodities, they move in the opposite direction. And that makes sense because commodities are priced in dollars, and as the dollar weakens, as we print more dollars and the dollar falls in value, I would demand more of those weak dollars for, let's say, an ounce of gold or a barrel of oil or whatever unit of commodity it is I'm looking for. And point two, commodities and interest rates move in the same direction. Now, when I say interest rates, I'm talking about the 10-year Treasury and 10-year Treasury yields more specifically. And you can look back into the 60s and you see that they usually move in the same direction. And that's key because that gives us some confirming evidence if we see a move in commodities to look over into the treasuries and see if they're confirming moving in the same direction of commodities or are about to get the signals saying they're going to either go up or down with the commodities. Point three, higher interest rates are bearish for stocks. Everyone seems to know that, and it makes sense again because as interest rates go higher, the cost of borrowing goes up and operating expenses go higher for companies. And also, high interest rates and commodities, if they're moving in the same direction, companies that produce goods or perform services will have to pay more to produce those items as the cost of materials are higher, and they'll also have to pay more to ship those items to their final destination for sale. So high interest rates are bearish for stocks, and that makes sense for a plethora of reasons. And so we begin with the US dollar. And on the daily chart of the US dollar, down below, point one shows that the stochastics are negative and continue to sell off. We gave this one a red mark. Also want to point out, too, that the dollar is down roughly 10% since the beginning of 2011, and it's down 20% since June of last year, so it's only 9 months and it's down 20%. But Ben Bernanke says there's no inflation out there. Well, if your purchasing power just went down by 20%, we noticed too that food and stuff like that costs a lot more. It's not just oil and gas that's going up here, and it's a lot of things. We go to the store and we see all kinds of things going up, and that's because the dollar is becoming depressed. It's going down significantly, and we're down 20% since last year, so we should expect to see an increase in prices at the stores. And a look down below at the MACDs and histogram bars. We see that the MACDs, they're bearish, and the histogram bars, they're negative too, so we gave this one a red mark, and the sell-off continues. And up top, the relative strength index is showing that it's been falling, it's slipping too, so we gave this one a red mark. And now let's take a look at the weekly charts of the US dollar. And the weekly chart of the US dollar down below, point one, shows that the stochastics, they continue to be negative. They're in oversold territory, but they're just happy to be there, it seems, as they continue on sideways. We gave this one a red mark. And a look at the MACDs and histogram bars in the weekly chart shows down below that the MACDs, they're negative, and the histogram bars, they're bearish. We gave this one a red mark. And up top, point one shows the relative strength index is descending too. It continues to fall, and it's also going to get a red mark. And so, summing things up for the US dollar, we analyzed the daily charts and the weekly charts. We found on the daily charts, stochastics, MACDs, and the relative strength index, all negative. We gave them red marks. On the weekly charts, much of the same thing, stochastics, MACDs, and relative strength index, all negative, all red marks. So for a total, we had 6 red marks, 0 yellow marks, and 0 green marks for the US dollar. Now we'll take a look at the commodities represented by the CRB Index. And down below, point 1 on the daily chart shows that the stochastics are overbought, but they continue on sideways in overbought territory. And we gave this one a yellow mark as it does show no sign of weakness. And down below, point 1 here shows the MACDs, they're climbing, and the histogram bars, they're also rising. We like that, and we gave this one a green mark. And up top, point 1 shows relative strength index, that's also positive and rising, and looks real strong, so we gave this one a green mark. So now let's take a look at the weekly charts. And on the weekly charts, down below point 1 shows that the stochastics are overbought, but they are moving higher, and we got a buy signal here. We gave this one a green mark. And a look down below at the MACDs and histogram bars. The MACDs are ascending, and the histogram bars, they rose slightly. There's not a lot going on here, but nothing negative to look at, so we gave this one a green mark. And a look up top, the relative strength index, it remains positive in overbought territory, but looks strong. Gave this one a green mark too. And so summing things up for the commodities, we analyzed daily charts and the weekly charts. On the daily charts, we were neutral on the stochastics. We gave them a yellow mark. MACDs and the relative strength index were both positive. We gave those green marks. Over on the weekly chart, we analyzed stochastics, MACDs, relative strength index, all looking positive and good. Gave them green marks. For a total, we got 0 red marks, 1 yellow mark, and 5 green marks for the commodities. And look now at the 10-year Treasury yields. And the daily chart of the 10-year Treasury yields down below point 1 shows stochastics, they're overbought and they're converging. Gave it a yellow mark. Little caution here. And the MACDs and histogram bars, MACDs, they're still climbing, and the histogram bars are positive, but they're flat. Like this though, it still looks pretty good, so we gave it a green mark. And up top, relative strength index, it continues to rise, so it looks strong. We gave this one a green mark too. Now we'll look at the weekly charts. And down below on the weekly chart, point 1 shows stochastics, they're looking bullish. We just got a buy signal as the red line the black line crossed over the red. And it looks pretty good here, so we gave this one a green mark. And the MACDs and histogram bars, MACDs, they're weakening a bit, and histogram bars, they're neutral, so we gave this one a yellow mark. And up top, relative strength index is rebounding. It's got a nice trend line there that's brewing under the blue line there. It turned positive. We like that, gave it a green mark. And so summing up the 10-year Treasury yields, we analyzed daily charts and the weekly charts. On the daily charts, found the stochastics, the MACDs, and the relative strength index, all positive, all green marks. On the weekly charts, stochastics, they were positive and got a green mark. MACDs, they were neutral, so we gave that a yellow mark. Relative strength index was also positive, so we gave that a green mark. And for a total, we had 0 red marks, 1 yellow mark, and 5 green marks for the 10-year Treasury yields. And now we'll take a look at the Dow Jones Industrial Average. And the daily chart of the Dow Jones Industrial Average, point 1 shows that stochastics are overbought, beginning to cross a bit here. It doesn't look good, so we gave it a red mark. And point 1 is also shown here that the MACDs are converging and the histogram bars, they're declining too. Little caution here. It's not negative yet, so we gave it a neutral yellow mark. Up top, we see the relative strength index is beginning to turn as it's losing some steam here, and it looks like we gave this one a yellow mark too. Now let's take a look now at the weekly chart. Point 1 on the weekly chart shows that stochastics, they are still positive, moving into overbought territory, but we gave it a green mark as things still look strong on the weekly chart. And the MACDs, they're a bit flat, and the histogram bars, they're neutral, so we gave this chart a yellow mark. And up top, the relative strength index shows that it's a bit neutral here as the past couple of days it's starting to flatline here, so we gave it a cautious yellow mark. And summing things up for the Dow Jones Industrial Average, analyzing the daily charts and the weekly charts, daily charts showed us stochastics were negative, gave them a red mark. MACDs and the relative strength index, they were neutral, so we gave those yellow marks. Over on the weekly chart, stochastics still look pretty good, gave those a green mark. And the MACDs and relative strength index there also look neutral, so we gave those yellow marks. For a total, Dow Jones Industrial Average, we had 1 red mark, 4 yellow marks, and 1 green mark. And so we've been coming up with scores for the U.S. dollar, the commodities, 10-year Treasury yields, and Dow Jones Industrial Average, looking for where the strengths are and where the weakness lies. We did that by weighing the number of positives versus the number of negatives and coming to a conclusion that way. And this week we found that the commodities and the 10-year Treasury yields came in for a tie. They both had 5 green marks, 1 yellow mark, and 0 red marks. Now, last week I had mentioned that commodities and the 10-year Treasury yields would begin to converge on each other, and that's exactly what happened this week. And the reason why is because we know that the commodities and interest rates will eventually move in the same direction. And that's what this is showing us right now. Coming in third place here would be the Dow Jones Industrial Average. That had 1 green mark, 4 yellow marks, and 1 red mark. Last place, we've got the declining U.S. dollar with 6 red marks, 0 yellow marks, and 0 green marks. And take a look now at the market gauge. The object here is to be as far in the right in the positive column as possible and as far away from the left in the negative column as possible. And this week we had the Commodities Index and the 10-year Treasury yields coming together, and both are positive. And the Dow Jones Industrial Average, we see that that's neutral, as we had 1 green mark, 1 red mark, and the rest are all neutral. So looks like it's a flat neutral here for the Dow Jones, and the U.S. dollar just continues to decline. It's looking very poor. We got that in the far left column, as it had 6 negative marks against it and nothing positive. Well, stay tuned. We got the IBD portfolio coming up. We started on January 28th of 2011 here with $10,000, and we're up, oh gosh, I think it's like 16-17% since then. We've been up 10 out of 11 weeks. Doing real strong here. We had a big winner this week on Friday. One of the stocks just absolutely exploded, and it was really good to see. So stay tuned for that. That video will be up here shortly. There'll be a link to it right about here when it is ready and available for you. But stay tuned and watch that. You won't want to miss it. But for now, I'm out of here. And now we begin our IBD portfolio. We started out on January 28th of 2011 here with $10,000, and we're going to $1 million or bust with this portfolio, whichever comes first. And this week our holdings, we started with Gulfport Energy, $37.04 starting out the week. And we had Tempur-Pedic, $51.67. El Paso Pipeline, $36.45. And Continental Resources, surviving the portfolio last week. Original stock in the portfolio, $71.95. Endo Pharmaceuticals was the new addition to the portfolio, $38.86. We'll see how we did with that stock. One of these stocks is going to get sold, and a new stock is going to enter this portfolio. We're going to sell the worst performing stock in this portfolio. And I'll tell you this, our number one holding this week did real good. Coming in, number one this week, it's Tempur-Pedic. And this stock has been pretty quiet in the portfolio for a few weeks, but it erupted on Friday when it had better than expected earnings, opening the week at $51.67 and closing at $57.17. We had a $253 gain in this portfolio from this stock. Let's take a look at the chart. And down below, 0.1 shows that the stochastics are falling a bit here from overbought territory here. There's no signs of strength here, so we gave it a red mark. 0.2 shows the MACDs, they're still jumping in histogram bars. They're surging. We gave this one a green mark. Up top, 0.3 shows relative strength index. That's still soaring, so we gave that a green mark. Overall, things look like they're maybe cooling off on the stochastics, but the rest of the chart's looking pretty strong here. And coming in, number two this week, it's Endo Pharmaceuticals. It's the new addition to the portfolio, opening the week at $38.86 and closing at $40.85. Pretty good performer, earning us $103.48 in the portfolio. Let's take a look at this chart. Down below, point 1 shows stochastics are overbought, but they're continuing to rise, so we gave that one a yellow mark. Point 2 shows the MACDs are rising, but the histogram bars drop, so we gave that one a yellow mark. Just show a little caution here. Point 3 up on top, relative strength index is lifting higher, so we gave that a green mark. Overall, things still look pretty strong for endopharmaceuticals, but we've seen this before, and we know it's just a matter of time before there's some profit taken in this kind of a move. And coming in number 3 this week, it's El Paso Pipeline. And I think El Paso Pipeline comes in number 3 every week. It started the week here at $35.19 and closed at $35.99. Total value added to the portfolio, $44. Just continues to creep up a little higher each week and survive the portfolio. Let's look at the chart. And down below, point 1 shows stochastics are overbought and they're beginning to turn a bit, so we gave this one a yellow mark. And above that, point 2 shows the MACDs, they're slipping, and the histogram bars fell, so we gave that a yellow mark. Up top, the relative strength index, it continues to climb, but it's flattening a little bit, but we did give it a green mark. Overall, El Paso Pipeline just continues to linger on in this portfolio, and I suspect it'll continue to do so. And so that only leaves room for one more stock in this portfolio. And the first stock up, it's the original stock in the portfolio, Continental Resources. Continental Resources found themselves here last week, battled for the 4th spot, survived the portfolio, and finds themselves here again. The second stock up is Gulfport Energy, same sector. Coming in, number 4. And remaining in the portfolio, it's Continental Resources. And we started out the week at $71.95 and closed the week at $70.87. Took away $34.56 from the portfolio this week. We're not crazy about that, but that was good enough to survive the portfolio. Let's take a look at the chart. And the chart of Continental Resources looks a little weak. Point 1 shows stochastics are negative and falling. Gave it a red mark. Point 2 shows MACDs are bearish and the histogram bars are negative. Also gave that a red mark. Got a sell signal when the black line crossed over the red there on the MACDs. Not good. Up top, point 3 shows the relative strength index is still neutral, so we gave that a yellow mark. Overall, I think that Continental Resources may find themselves here again next week. And so Gulfport Energy is out of here. And opening the week at $37.04, we closed the week at $34.63. Total loss of $166.29 in the portfolio. Let's take a look at the chart. And things don't look too good for Gulfport Energy. Point 1 down below shows stochastics are falling, gave them a red mark. Point 2 above that shows the MACDs, they're indicating sells. The black line has crossed over the red. And the histogram bars, they're dropping too. We don't like that. Gave it a red mark. Up top, relative strength index is negative. It's falling. Gave it a red mark. Not good for Gulfport Energy. And so summing things up for the IBD holdings this week, we had a winner, Tempur-Pedic. $253 added to the portfolio. Nice performer on Friday. Second place was Endo Pharmaceuticals, coming in with a $103.48 gain. El Paso Pipeline, perennial third placer, $44 gain there. Continental Resources surviving the portfolio second week in a row, $34.56 gain there. Can't have that again. Gulfport Energy is out of here, $166 loss. We don't like that. Got cash in a portfolio of $115.15. Total values $11,545.53 in the portfolio. Started out with $10,000 January 28th. It's looking pretty good so far. But that means there's going to be a new stock added to the portfolio now. And that new stock this week is Spreadtrum Communications, symbol SPRD. Closing the week at $20.35. Got a market cap of $976 million. Average daily volume about 1.35 million. This is a Chinese communication company. Shows you how tough things are when you have to dig so deep in the IBD 50 and the only stock you can find is a Chinese company. Let's take a look at the chart. And the chart here looks pretty good. Point 1 down below shows stochastics are bullish. Black line crossed over the green and we're headed higher, gave it a green mark. Point 2 above that shows the MACDs are positive and the histogram bars are rising. Gave them a green mark. And up top, point 3 shows the relative strength index is climbing too, so we gave that a green mark. Things look pretty good for Spreadtrum Communications. And going into this week, we're holding Tempur-Pedic, 46 shares, total value $2,629.82. We've got Endo Pharmaceuticals, starting the week at $40.85, total value there $2,124.20. El Paso Pipeline, starting the week at $36.71, $2,019.05 there. Continental Resources surviving the portfolio and starting the week at $70.87. Total value there of $2,267.84. And a new addition to the portfolio, Spreadtrum Communications. Picked up 117 shares of that stock at $20.35. Got a total value of $2,380.95. Cash in the portfolio now consists of $123.67. Total value $11,545.53. Overall, it was real tough to find a stock out of the IBD holdings this week. I went through 50 stocks and found 2. One looked good, Spreadtrum Communications, and the other looked just okay. Didn't look good out there, so I went ahead and looked at the Dow Jones Industrial Average, analyzed all 30 of those stocks too, and they looked like they were a little toppy and headed down too. A couple of them looked all right. It didn't look like we're getting into a crash or anything, but looks like we're maybe getting ready to turn here in the market, and stocks may be heading lower here as it's getting more difficult to find things. And to be honest with you, I was going to go with just cash and hold that as a 5th spot portfolio for this holding for this week, and Spreadtrum just looked too good, and we'll just have to see for this week. And you know, these stocks have got to perform or else they're out of here.